and welcome to Welspun Speciality Solutions Limited Q2 FY2025 earnings conference call hosted by JM Financial. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashutosh Somani from JM Financial. Thank you, and over to you, sir.
Yes, thanks, operator, and welcome everyone to the call. I'll first thank the management for giving JM Financial Institutional Securities Limited the opportunity to host today's call. Without much ado, I'll hand over the call to Mr. Salil Bawa, Head Investor Relations, Welspun Group, to introduce the management. Over to you, Salil.
Thank you very much, Ashutosh. Good morning to all of you, and season's greetings. On behalf of Welspun Speciality Solutions Limited, I welcome today all of you to the company's Q2 and H1 FY25 results earnings call. Along with me today we have Mr. Anuj Burakia, Chief Executive Officer and Whole-Time Director. I also have Mr. Brijveer Singh, the Chief Financial Officer, and my colleague Gautam Chakrabarti, who heads Investor Relations for Welspun Corp. We hope you have had a chance to review the investor presentation that we filed with the exchanges yesterday. It is also available on the company's website. During the discussion, we may be making references to this presentation. Please do take a moment to review the safe harbor statement in our presentation. As usual, we will start the forum with opening remarks by Mr. Anuj, and then we'll open the floor for your questions. Once the call gets over, should you have any further queries that remain unanswered, post the earnings call, please feel free to reach out to any one of us. With that, I would now like to hand over the floor to Mr. Anuj Burakia, Chief Executive Officer. Over to you, Anuj.
Thank you, Salil. Good morning, everyone. I want to extend a warm welcome to all of you for joining our Q2 and H1 Financial Year 25 earnings call at Welspun Speciality Solutions Limited. Today, I'll briefly share insights into the global macroeconomic environment, our industry scenario, and the company's performance before we dive into an interactive session. Let's begin with macroeconomic outlook. According to the IMF, global GDP growth is projected to be 3.2% in 2024 and 3.3% in 2025. While we navigate ongoing geopolitical tensions, including the recent Middle East escalation, India's growth story continues to remain strong, with forecast upgraded to 7% for financial year 25 and maintained at 6.5% for financial year 26. This is largely driven by robust domestic demand and a very stable governance framework. The RBI, in its latest announcement, has projected real GDP growth at 7.2% for financial year 25. In Q2 financial year 25, we faced a challenging, rather muted demand environment. Sluggishness in Europe, coupled with a cautious sentiment in USA ahead of elections, has created a notable headwind. This has led to pressure on pricing and contributed to a decrease in our contribution margins. Furthermore, logistical issues, including container availability and fluctuating freight costs, have added to these challenges. Turning to our financials, we reported a revenue of 341 crores for H1 financial year 25 and EBITDA of 25.11 crores for this period. SS Steel Products sales volume during this period stood at approx 8,700 tons, while pipes and tubes volume stood at about 2,450 tons. Similarly, for Q2 financial year 25, total income stood at 173 crores with an EBITDA of 8.3 crores. During Q2, we made a PAT loss of approximately 6 crores primarily attributable to decrease in contribution margin during this period, as I explained before. On a positive note, our order book remains robust, standing at over 5,800 tons, valued at about 271 crores. Despite the situation, WSSL could maintain its top-line revenue owing to our strong customer connect and relationship. We anticipate strong rebound in demand for steel bars starting quarter 4, particularly in the EU and US markets. Recent rate cuts by various central banks is further expected to boost economic activity and demand for capital goods. In pipe business segment, WSSL is strongly positioned and expect to deliver strong performance in the upcoming quarters starting quarter 3. I wish to highlight and draw your attention to the paradigm shift that's happening in the Indian market economy. Government spent on infrastructure, energy, defense, and other strategic sectors coupled with Make in India is creating clear demand thrust in the country. The growth spend is expected to continue and increase further in times to come. In this scenario, an integrated special steels and seamless tube player like WSSL offering end-to-end product solution has incredible opportunities coming its way. We are thrilled to note this belief further gets reinforced with WSSL's significant win of approx 1,400 metric tons BHEL contract for Super 304 grade seamless tubes valued at about 117 crores for prestigious NTPC Talcher supercritical category power project. The tubes are being manufactured in an integrated manner right from the stage of melting the steel to delivering ultrasonically tested and short-peened final boiler tubes. This landmark project marks the first large-scale contract awarded to an Indian company for this specialized product, traditionally imported. Successfully delivering this project will greatly enhance our reputation and establish our competence and credibility in the attractive power gen tube segment. Our commitment to innovation is unwavering. We are advancing our certifications, including AS9100D for aerospace and NORSOC 650M for North Sea applications. Additionally, our new product offerings such as 13 chrome and 9 chrome bars for oil and gas application and niche Welspun 50 has been successfully developed, produced, delivered and commercialized. I am very pleased to share that U.S. Department of Commerce, after detailed assessment under new shipper review, recently determined nil anti-dumping duty on SS bars exported by WSSL to U.S. during H1 of calendar year 2023. This development enhances our confidence and business prospects for the company in the U.S. market. We are intensifying our marketing efforts in USA and Canada, anticipating a revival in demand following the U.S. elections. Our exploration of new markets, including Brazil, Mexico, and South Africa, reflects our strategic growth initiatives. Sustainability remains at core of our business at WSSL. I am proud to report a 10% reduction in overall energy intensity during H1 financial year 25 as compared to financial year 24. With renewable energy now comprising 38% of our total electricity consumption, we are dedicated to integrating sustainable practices into our operations. In last, while the external environment may not be entirely conducive, we remain very optimistic about WSSL's path forward. Our strong customer relationship and integrated solutions position us well to seize greater opportunities. Now, I'd like to open the floor to the questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, audible?
Sorry, didn't get the name. Can you please repeat?
I'm Raj from Arjav Partners.
Yeah, Raj.
Yeah. Am I audible?
Yeah, Raj. Good morning.
Sir, I've been tracking this company for 1 or 2 quarters. I just wanted to know, once we get the approval for AS 9100 and Welspun 50 and the other products, so how big is the opportunity size for us?
So Raj, you see, a lot of sectors require a lot of different accreditations and certifications to operate within them. Okay. Now, what happens is, if we are selling, let's say, our products to one customer in, say, for example, in the United States, and this customer of ours is catering to various, sectors, which includes oil and gas, which includes, let's say, oil well services, which includes nuclear power, which includes aerospace, which includes, chemicals and things like that. Now, obviously, the customer would want us to also have maximum certifications possible to be able to stock our products and can use it for any of these applications. Okay. So as we progress, and the certifications like AS 9100 requires a lot of experience, maturity before one company can really get accredited with this kind of certificate, which is primarily for aerospace applications. So more than how much market is there for aerospace, which is also, by the way, guided by many other factors, important is to have that accreditation as one of the feature of the product, which can then be, supplied to the market, wherein it is being used for multiple applications, not just one. The NORSOC 650M is a specific certification which is required for North Sea application. This is a standard that is followed by Equinor in Norway, enabling any mill to supply the products for that particular application, which is considered as niche. Especially the products that goes into that application are of a high value nature. Now, as far as Welspun 50 is concerned, this is a particular grade which not many mills in India does, and is widely used for multiple applications. This doesn't require any certification as such, the quality of product, and which we have been able to successfully develop and and have already sold to many customers and look forward to doing more volumes in those.
All right. And sir, how much is the price per ton of these category of steels?
Well, the certification is not for one particular steel. There would be multiple grades and things, so there is no one price. Particularly for Welspun 50, which is one product, I can roughly say that it is something like $8,000 a ton.
All right. And sir, I wanted to ask, for a simple SS bar and SS pipe manufacturing company, how much time it takes to get all these accreditation?
Well, Raj, I think first of all, SS is a very wide subject. I don't know how much you have been able to really study and research about it. There would be numerous number of grades and categories and products that that can be produced in stainless steel. Our philosophy at Welspun Speciality, as the name suggests, is only to be in high value add specialty segment. Having said that, of course, our lowest grade that we produce is, let's say, standard austenitic 300 series. But to say that it is a simple production and simple to do, I think it takes time to really mature and get to a level where a company can achieve certifications like AS 9100, which requires a huge maturity in QMS systems and documentations and the level of knowledge that's required. The audits are really stringent, and they are conducted by the field experts, and it is always advisable to go for it once the level of maturity has been achieved.
Okay. And sir, who are your peers in this category?
I'm sorry, come again?
Hello. Who are your peers in this category?
Okay, it will be difficult to say that there is one peer which we can compare, because this is a unique proposition where we are producing right from steel to final tubes, and that too in particular category using hot extrusion route. There are a lot of players, and they may not be directly comparable, maybe partially comparable. So it's really difficult for me to say that who is a direct peer here. But there are global companies like Sandvik, like Cubasex, like Manasman, Sumitomo, who are into this field in a similar segment. And of course, there are some large Chinese companies as well.
Understood. So, sir, once we get all these approvals...
Raj, please rejoin the queue for further questions.
All right. Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity.
Good morning, Radha.
Good morning, sir. So my first question was that can you please talk a bit about the total requirement of SS bars in India? And out of the total requirements, currently how much capacities are there in India? And are there any imports? So a bit about the industry scenario on SS bars in India.
Okay, so there are two aspects. One is how much is being produced in India and how much is being really consumed in India. So I will only talk of flat steel, and of course there is some overlap between long steel, and there is some overlap in products which are considered long but are made of flat, like for example welded pipes. So if we talk of purely long products play, the overall capacity in India with let's say the prime players is approximately 1.5 to 2 million tons of total capacity in India. Of course, flat steel capacity is more, about I think 2.5, 2.8 million tons. So overall, SS production in India, is anywhere between 4 to 4.5 million. Now, out of this, about 50 to 60% is something which gets exported eventually, in various forms. May not be just a steel bar, it could be then further forged into various components. It can be extruded into various parts, machined into, components and parts in various forms. It is not like normal carbon steel, which is used in bulk in infrastructure. Stainless steel mostly is used for special applications in very high corrosive or, very high temperature requirements. So overall, you can say these are the numbers around which, we are playing. The global market in stainless steel, inclusive of all forms and everything, is about 55 million tons. And out of which 65% of the production out of that is coming from China alone.
Okay, sir. Domestic industry size, what did you mention?
Overall production about in between 4 to 5 million tons, including domestic flats.
Okay, sir. And secondly, sir, we are targeting a lot of exports in both SS bars and pipes. So particularly for the SS bars, I wanted to understand which are the key regions that we are targeting and what is our USP or competitive intensity in these SS bars products?
So I think I already spoke about 2-3 points. One is on the bars. Of course, you see, we have to sell where there is consumption. Okay. Now the bars and the category of bars that we produce in bigger sizes is mostly for engineering applications into various sectors. Now, the consumption is highest in these segments. If we talk of non-China world, is majority into West, Europe being the largest consumer, then followed by, of course, US, Turkey, and they're kind of similar or, for us as a immediate next priority markets. So these are the markets that obviously we are eyeing, and, we have attained a lot of, I would say, comfort and maturity in the European market, which was our first market to go to. And now we have intensified our activities in United States and overall Americas, I would say. So these are the markets that we are definitely targeting. Now on the competitiveness side, I can tell you that, probably India is one of the most competitive producer, and so are we. So I don't see a challenge on that, on that front, except that, sometimes the markets are not good and your margins overall are a little squeezed. So that's a different story.
All right, sir. So lastly, what is the overall business opportunity in nuclear power business in India?
That's a very, very wide question. I think nuclear power opportunity is running into billions. But that's something which is very closely guarded with the policy and, the releases of budgets. And so what I broadly know is that about 10 reactors are being envisaged, and all of them are in different stages of maturity. Some are already on the ground, some are about to start, some are in the budget clearance stages, things like that. And a nuclear reactor would consume like plethora of products. Out of that, even the tubes of various kinds, and so I think it's really difficult to put it in terms of an amount or a number. But what I can tell you is that with Make in India, any reactors that are coming in the country, the first preference is definitely to the Indian companies. And as Welspun Speciality, I can tell you that we have played a very important role and have really supplied the most critical steam generator tubing, which is the heart of the nuclear reactor, in partnership with nuclear fuel complex. So we have the required experience, and as this business grows in India, we are ready to grab that opportunity.
Okay, sir. I'll come back in the queue.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Good morning, sir. Thanks a lot for the opportunity. I had a couple of questions to understand the demand part. You did speak about it in the start of the call. We just wanted to clarify this part. You said that the demand was muted and a lot of impact also came from the container traffic, freight issues because the freights have spiked. So can you just let me know that how has the domestic demand trend been in the past quarter versus, as you already mentioned, that the export part is being affected because of the container freight. So how was the domestic demand? Is that also muted or was that decent?
So let me try to explain this, Miraj. So first of all, there are two products that we are talking about, and both are, very different in nature. So one is the stainless steel bars, and the other is the seamless pipes and tubes. Okay. Now, if we talk of stainless steel bars, major consumption, as I was explaining earlier also, that India is not a big consumption center at this point in time. Even to the customers that we are selling in India, okay, I would assume that at least 50-60% of those bars further gets processed and eventually end up getting exported in various forms. So which means if the external market out of India or the export market is not doing well, or if it is muted, for a mill like us, the direct sales in exports as well as our customers in India who are again dependent on exports, the effect come on all of this. And it's it's an open situation at this point in time that how Europe is performing for last 1 year and especially in last 6 months, and how US, the two major consumption centers, how they are operating at this point in time. And that is what is also showing into the demand which is there for the steel bars and the pricing pressures that are there. However, we are very clear and very confident that, quarter 4 onwards, this demand will start to come back. So that is on the bar side of it. Now, coming to the pipes and tubes, our volume remains constant, or it has rather improved a bit, which is more, towards the domestic Indian side. So, as I mentioned in my commentary also, that we are very, bullish on the seamless pipe side of it, especially when we look at the, Indian domestic consumption. This recent few years, the activity that has happened in the public spending, and especially in last 2 years to 3 years, if you see, a lot of strategic projects which were earlier being talked about are now already on the floor. The tenders are coming out, and, the demand has got really created in the market. So, on the pipe side, I think, it is more domestic looking than, outside. Of course, having said that, not that, our focus is not there on exports, but to simply put, 3 years back when we were doing 30% domestic sales in pipe and 70% exports, at this point in time, it is, you can say it's reversed. Now we are selling 70% in domestic and 30% exports.
Understood. So that is for seamless pipes that we have reversed. The domestic sales are more. So on the bar side, SS bar side, could you let me know how much are we selling in domestic and how much are we exporting directly?
Bars is, let's say, about, depending quarter on quarter, 60 to 70% is exports, and about 30% is, domestic.
Understood. And so just for knowledge purposes, if I wanted to understand that since we are having issues on the freight part, is there any region that is being benefited because of this? Is there some other geographical region who's gaining advantage because of other countries having issues in exporting?
See, what led to this freight crisis during H1, there are two factors. Okay. First factor is this discontinuation of Red Sea route, or it is not discontinued, but let's say none of the shipping lines want to take that risk of coming under attack. A lot of ships got attacked in the past. So most of the lines, let's say from India to Europe, the actual route or the reasonable route or a viable route is going through the Suez Canal, which passes through that Red Sea. Instead of that, all the vessels are now going through, under the South African region, which is the Cape of Good Hope, and which has increased the voyage time, average voyage time, which used to be 25 days to Europe, to now 45, 50 days. Now, which is significant. It's not just 2, 3, 4 days addition. It is like, double the time it is taking. And therefore, the costs have escalated, and availability, because, the same turnaround that was probably happening in 50, 60 days is now happening in 100 days. Right? So, the container equipment is remaining more on water, than being really used. So, that is one factor. The second factor was during H1, there were some heavy traffic that was flowing between China to US, and we understand that most of it was for EVs. The good news is that now we are seeing towards the end of, let's say, September and beginning of October, that the freights have started to soften a bit. Of course, the Red Sea crisis still continues. That is not the factor where we've got a relief, but this traffic between China and US seems to have gone down, significantly now. So we see this situation improving in times to come.
Understood. And so just a thought over here that geographically, if I see, wouldn't China be the best to supply demand in US because that region would be closer?
Well, see, just because they are, distance-wise, and actually they are not, because if you look at east coast of US, it's still a haul. More important is the other trade policies, the other trade barriers, and which applies everywhere. We have restrictions to supply beyond the capacity in Europe or in US. Similarly, China has also got restrictions. So, logistics-wise, one origin can have some advantage over the other, but it is not so significant that, China can take over all the business. So we have, especially in the value-added grades, and which is what is our whole business idea, we have a huge opportunity in the US market. But as I explained earlier also, it's a special product. It takes some time to really get approvals and, trials and then finally become a commercialized product, and which we are on the path.
Understood. So is that the same thing that you mentioned in the presentation that we're expecting better outlook on them in Q3 and Q4? Is it for the same high-value pipes that you mentioned right now?
The high value is part of the overall sales that we do. What I mentioned about Q3, Q4 is simple two things, that on the pipe side of it, we are doing very well, and I am very confident of continued or even, much superior business performance during Q3, Q4 when it comes to pipe. On the steel bars, since the external environment still continues to remain a challenge, little unpredictability looks to be there. However, in all fairness, we definitely expect the demand to bounce back starting quarter 4 for the steel bars. And since you see, we keep engaging with customers, policymakers, analysts, so basis that, this confidence is coming from all our analysis that after a muted performance on steel bars in the market for almost 3 quarters now, quarter 4, and by the time, the US elections will be over, so US market is also expected to bounce back, which is also muted at this point in time. So we strongly believe that quarter 4 onwards, the bar business or bar demand, will bounce back.
Perfect, understood. So just one last question before I get back in the queue. In the presentation, you mentioned that the U.S. Department of Commerce has assessed nil anti-dumping duty. It was mentioned as H1 FY2023. Till when is this applicable?
So, Viraj, what happens is the U.S. has a typical system where, they assess the duty for 1 year at a time. Okay? Since we first started the business in 2023, is the first result that they have now released. So it goes with a lag. So what the significance of this is an untested territory wherein, of course, we went in with all the calculations and, with the right strategy. This is, in a way, our strategy getting proven, whereby if, let's say, we would have got an anti-dumping, which can go to any extent, it could have completely dented our plans of doing business into US. So let's take this as, a clear indication that our strategy is right. We are playing the game by the rules, and we could get anti-dumping on, for that period at 0. So if we continue our strategy in that manner, it gives us a lot of confidence that we will not get entangled, with the anti-dumping in US.
Okay, so this was the retrospective action. Is that the right way to look at it?
Yeah.
And the next assessment would come with same period next year?
Every year it will come for a period which is,
1 year.
Yeah.
Understood. Okay. I have a few more questions, and I'll get back in the queue. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Hello. Can you hear me, sir?
Yeah, morning, Rahil.
Yes. Hi, good morning. So you mentioned SS bars is looking weak. Demand is to be, to revive from Q4 onwards, but pipes and tubes is looking promising. So what does that mean for our guidance, which you had given earlier? So now you had said 20-30% you will be doing in FY25. And also contribution margins now going ahead, will they improve or will we still see, losses at the PAT level? Thank you.
You see, Rahil, first of all, in the kind of volatility that is existing, it is difficult to give guidance on Q3, Q4. So when we spoke first, it was a relatively stable external environment. The escalation of war-like situation and, the things which are happening around, I think it will be prudent to stay a little, little paused and really observe and, take the actions which are really prudent for the business. The guidance that I gave, 20 to 30%, still stays the way we are poised, right? So as far as our internal preparation, our, customer connect, our product development, our strategy is concerned, we are definitely on the path. If you'll notice, we have been given the situation which is really adverse outside. We still have been able to maintain our top line and we remain prepared for as soon as there is better environment outside, we will also bounce back. So maybe our increase over, our past by 20-30% has got a bit delayed, but it stays. It still remains, and, we will get there. It's a matter of maybe 1 or 2 quarters that it has got delayed.
Sorry to interrupt, Mr. Rahil. Could you come a bit close to your handset?
Hello, hi. Can you hear me?
Yes, it's better now.
Yeah. So what you mean to say is, obviously you're in observation period, but when you say the 20-30% guidance stays, is it for the near future? Is it for this year?
Sorry, I couldn't get the last one. Is it for?
Is it for the near future, like, or maybe next year, or is it for this year? You still think you can achieve it?
Well, I think, as I said that, on the pipe, we are maintaining our, very, very robust position, and there is no delay on the pipe side of it. On the bars, owing to the situation, Q4 onwards, we see the demand returning back. So maybe we should be able to see, some better scenario starting from Q1.
Okay, so you're saying that pipe is more than enough, keep the growth momentum.
Very, very strong.
Okay. And margins you can't say because it's really volatile at the moment.
Margins are intact. I mean, see, it's a pipe is altogether different business. It's a super specialty, you can say. Bar is a mix of, specialty, super specialty, and also some, standard products.
Okay. Yes, thank you and all the best.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yeah, Mr. Raj, you are audible.
Sir, once we get the approvals of AS category and about 650 and others, are we expecting a drastic improvement in the order book?
So, Mr. Raj, we have already got a lot of approvals. These are the decorated ones. So, it is not be, it will not be prudent to say that just by getting 2 certifications will be a drastic. So, it has to be built brick by brick. These 2 accreditations represents 2 high value add segments within the overall scheme of things. Okay. So, if you would notice in last few quarters, every quarter we have done some or the other, addition on accreditations, and which is like building the capability wherein, we will be able to do better volumes and better margins by having these accreditations under our belt. So, very, very difficult to say that, an accreditation can really pull in a, big volume or a business. But yeah, if these are not there, our sales are definitely going to suffer, wherein, the customers would prefer to buy from the mills who have multiple accreditations, so one stock can serve, multiple purposes. So, am I able to explain it better?
Understood. And sir, regarding the execution, I wanted to ask how much is our current outstanding pipeline?
You mean the order book?
Oh, not the order book. I'm talking about the leads.
Oh, leads.
Yeah.
Well, there are a lot of projects that we have bid. I mean, especially on the pipes, and they include both domestic as well as exports. Here the case is a little different from very large project pipelines, that we talk about. But broadly, I can say that I think our balance bid book would be anything between 120 to 140 crores on the pipe side of it. As far as the bars are concerned, you see, bar is not a business which is, bid like a project. It is normally like an inquiry based, and if the transaction has to happen, it normally, for the most of the business, it just happens in a week, 10 days, 15 days time. So maybe at this point in time, we may have, 20, 30, 40 crores of bids which may be under discussion. But there are no long lead, offers in case of bars.
All right, sir. And sir, regarding the execution, so we are expecting FY25 to be a flattish year, right? And growth is expected from FY26 onwards. So on the earlier calls, you had said 20 to 30% growth. So that stands for FY26 now. Am I right?
Well, at least for 25, you can, since 2 quarters have already gone, and we have seen what's happening around. So you are right in saying that 25 could be a flattish year. 26, whether it is going to be 20% or it is going to bounce back more sharply, and it could be 40% also, I think let's go a little nearer, and then we'll be able to make a better prediction in that case.
Understood, sir. And sir, when I look at the hello.
Yeah, go ahead.
Am I audible? When I look at the shareholding of a company, so there's an individual named Dilip Kumar Lal ji. He has 23% stake in the company. So what exactly role does he play?
There is no, on the role side, I can simply say that, if somebody is holding 2% or 0.2% or 2 shares, is the same role that Mr. Lucky is also playing with 23% stake. So he believes into the business of the company and stands, invested in a big way, and that's about it. There is no involvement and participation in the management.
Understood. So he's an investor sitting in the company with 23% stake, right?
And it's been a long time, invested in the company.
All right. Okay. Thank you. Have a good day.
Thank you. The next question is from the line of Radha from B&K Securities. Please go ahead.
So thanks again. So I wanted to understand that with current capacities, is it correct to assume that we can sell externally 75 to 80k tons of SS bars and 8,000 tons of SS pipes?
Theoretically, yes, Radha, but to get to 85,000 tons of external sales, there is progression which is involved, right? To understand it easier, currently we are utilizing less than 50, in fact, rather about 40% of our capacity of saleable steel, which also includes the steel which goes for our captive consumption for pipes and tubes. This, of course, our focus is to ramp it up to a level of 70-75% first, and then eventually to 85-90%. But there is, of course, gestation involved in that. So we are not looking at big capital investments. We are not looking at adding more streams, to the production lines. So the whole focus is also to, increase our capacity utilization. This I have said before also, and, that focus stays. Similarly, on the pipe, the usable capacity is approx 8,000 to 9,000 tons. Currently, we are, I would say, at a run rate of about 70-75% of that. And on pipe, I am very confident that, over the next few quarters, we should start hitting the 90-95% utilization.
Okay, sir. Secondly, so with the trial runs and getting approvals, then new markets that we are planning to enter with new products. So is it fair to assume that it could take around 3 to 4 years to reach our full potential of sales in SS bars and SS pipes?
If we talk from the let's say installed capacity standpoint, I think on the pipe side we should get to that run rate in about 1 to 1.5 years, and on the bar side anything between 1.5 to 2 years.
So both within.
Sorry to interrupt, Ms. Radha. Could you fix your handset? There's a lot of disturbance.
Yeah, sorry. 2 years. Hello?
Yeah.
Yes,
Okay, now.
Yes, sir. So both SS bars and SS pipes, you are expecting the utilizations at full utilizations within 2 years.
Yeah, that's right.
Okay, sir. Great. So just wanted to understand that peers like Venus and Skoda, so they are targeting aggressive growth and also growing at double digits, and some players like Ratnamani, they are growing at single digits. Whereas this year in first half, as of now, our pipe vertical has not grown. So there seems to be a mismatch with the peers. So can you please help us understand how to figure out these numbers?
So, first of all, the one company that you spoke about is not apple-to-apple comparison, because they have got, different basket of products that we have got compared to what we have got. They are into welded pipes, they are into fittings, they are into, lot of different products. So, I'm not, and plus, the proportion of seamless pipe for the sectors that we are selling in their overall scheme, we are not aware of that. I mean, we don't have such analysis with us, and they are not available in the public domain. So, I think, the analysis needs to be done in that sense that, the other sectors, other products that they are doing, how they are, how those sectors are performing. Similarly, on the large player, let's say Ratnamani, we speak about, again, that comprises of large diameter carbon steel pipe, large diameter stainless steel welded pipes, then welding lines, and then also seamless. So, again, very difficult to compare, as to which product is doing how much or doing how much. But I can tell you in general that, we are also no different than any other player when it comes to the overall demand with respect to the seamless pipes in stainless steel. So, with experience and with whatever knowledge I have, I can tell you that everybody is sailing the same boat. On the bar side, none of these players are into bars. So, anyway, there is no comparison possible.
Okay, sir. Sir, when in 2 years we are expecting to reach full utilization, so assuming the current realizations and the product mix, could we assume 200 crores potential EBITDA at full utilization for the company?
Well, Radha, I think it will not be prudent to say anything like that, because what a business can control is, its quality, utilization, customer connect, and, things like that. But there is a big role of market, demand, supply, and pricing of raw material that has to also come into play. So, I mean, I would not I would not like to give any vague numbers around it. So most important for us is to focus on increasing our capacity utilization. And obviously, in a better utilization, the efficiencies are better, and the margins and potential of making margins is much higher. That is where our focus remains.
Okay, sir. The last question, with our current plans in the next 2 years, so there could be a lot of cash generation. So what would be your capital allocation policy? Do we have debt reduction plans on cards?
So we are not looking at any major capex. That is very, very clear. Given the situation and the strategy that we are very clear about for the last, more than 1 year, we are only focused on increasing our capacity utilization, and will be only looking at the sustenance and the upgradation capex wherever it is required, and that we are doing also. So I would not assume it to be more than 10-15 crores a year. If there is anything specific, that's required in the real nature of capex, would also be not away from enabling the existing utilization, right? So no new lines, no new products. I mean, it's only focused on existing utilization. So that's how, we are very clear on our capital allocation.
Okay, so thanks very much for explaining in detail. All the best to you and team.
Thank you so much. Thanks.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Miraj from Arihant Capital. Please go ahead.
Thank you for the follow-up opportunity, sir. I think most of my questions are answered. I just had one question regarding the pipes part, seamless pipes. These are made from billets, right?
So Miraj, I don't know what you call. See, we use a lot of words in common parlance, but there is something called cast product. Then it is rolled into black bar. Then it is made into bright bar. So bright bar is the input for producing seamless pipes.
Okay, bright. Okay, understood. And sir, I believe we are doing some more towards critical equipment and probably higher value. So these wouldn't be used in the oil and gas segment, right? Or are these also used there?
See, the segment and application are mutually exclusive, Miraj. Within oil and gas, there are, I'm just giving you an example, 20 different uses of 20 different kinds of seamless pipes in stainless steel. Okay. So, within oil and gas, we have seen very, very high value add 625 nickel alloy tubing going into, offshore platforms and in the refineries. Whereas for the simple transportation of some chemical, in an offshore platform or a refinery, could be a simple 304 grade pipe, right? So what we are focused on is value add in terms of the application, right? Our focus is, or our intention always is to be into the critical applications game and not in the standard transportation pipes, which can also be supplied from piercing route, right? So the piercing route of producing stainless steel seamless pipe is suitable for low cost, low value applications. Whereas, when we talk of critical applications, at most of the time, we find that the hot extrusion only is the suitable route, and which we employ.
Understood. Okay. I think so that's it from my side. And just want to reiterate the guidance part. You said for 2 years is 20 to 30%, right?
No. I said 20 to 30% guidance stays. It has got delayed by 2 quarters, and we are very sure that next year we are going to definitely achieve the same.
Understood. Okay. Yeah, that's it from my side, sir. All the best. Thank you.
Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of our Q&A session. I would now like to hand the conference over to the management for closing comments.
Thank you. Okay, as we wrap up today's call, I wish to acknowledge the external challenges that we face, many of which are beyond our control. However, our focus remains steadfast on our core competencies. We are dedicated to developing and delivering high-quality grades for critical applications, while continuously expanding our market presence. We believe that our company's performance will not only sustain but also improve through an unwavering commitment to one, exploring new markets, enhance customer acquisition, and expand into new territories. Innovative product offerings that meet critical market needs. Building strategic partnerships, securing approvals and accreditations to enhance our capabilities. Embracing technology and fostering innovation and digitization will be crucial to streamline our processes and drive growth. I hope we have addressed your questions effectively today. If you have any further queries, please don't hesitate to reach out to our investor relations team. Thank you once again for joining us, and I look forward to reconnecting with you, all of you soon.
Thank you. On behalf of JM Financial, that concludes this conference. Thank you for joining us. You may now disconnect your lines.